Morning, everyone. Welcome to CSIS. My name is Matthew Goodman. I hold the Simon Chair in Political Economy here at CSIS, and I'm delighted to welcome you to our humble abode. Welcome also to our online viewers. We always have a good following online. Delighted to have you with us as well. This is a special event today on infrastructure, and I'm going to introduce that in a second. But first, let me make a couple of the usual administrative announcements. First of all, if you have any noisemakers, please set them on stun. Actually, 50 years later, I'm not sure I can get away with that joke anymore, but I was a big Star Trek fan as a kid. Secondly, in the event of any kind of security incident, which is, unlikely, but if we have that, we have exits here and here. There's an alley down the side here. If you go out onto onto Rhode Island Avenue, take two lefts, you'll end up at National Geographic, which is our assembly point. Just follow me. I'm your security officer. We're going to have a couple of rounds of presentations, and then we're going to have a break at 10:30. There are restrooms around the back here if you go out through the glass doors and around to the back. And I think that is all the administrative matters. So let me just say that CSIS has been, for the last 2 or 3 years, following quite intensively the infrastructure story, particularly in the greater Eurasian supercontinent. We have a project called Reconnecting Asia, where we're mapping projects, hard infrastructure projects, across this large supercontinent. And these developments of connectivity infrastructure, roads and ports and railways and airports and ICT infrastructure, these projects are going to change the landscape, are changing the landscape of this important region, and in economic ways, of course, politically as well, and physically, I guess, as well. So it's a huge story, and it's something we're following very closely. And we've been doing this by reaching out and establishing partnerships with lots of other people who are expert and knowledgeable in this area. And we were delighted to find that we had fellow travelers at Stanford University at the Stanford Global Projects Center. There's a group that you're going to meet today who are working in a very interesting way on this set of issues. And they're going to present the findings of some research they've done comparing, let's say, Western and Eastern approaches to infrastructure projects and to identify best practices and so forth. So this is a really interesting new exposure for us to the way infrastructure is built and the best ways to do that. So we're delighted to be partnering with Stanford today. We'll have the presentations from their team, from John Hillman, who directs our Reconnecting Asia project. Then we'll take our break. Then we'll come back, and we're delighted to have Brendan Bechtel, Chairman and CEO of Bechtel, here with us today to have a conversation with John Hamre, our president, and Ray Levitt, who I now have the pleasure of introducing. Ray is the director of the Stanford Global Projects Center. He's been at Stanford for many years, longtime faculty member there, focused on strategic project and portfolio management, and we're just delighted to have Ray with us today. So Ray, please come up and join us. Thank you.
Thank you, Matt, and thank you to CSIS for this opportunity to share our work with all of you. As a group that studies the financing, governance, and sustainability of global projects, we've been very interested to watch the development of infrastructure around the world, something that historically had been done mostly by Western countries, but more recently with very, very active involvement, particularly by China, but also Japan and Korea and other countries. And we're going to talk today about a multi-year study we've been running, looking at the way that, in particular, the Chinese have been developing infrastructure in Africa, but also in other parts of the world. And so just first of all, very briefly, just what is our center? We're an interdisciplinary cross-cut. We're a virtual organization that cuts across multiple departments. We're housed in the Department of Civil and Environmental Engineering in a group called the Sustainable Design and Construction Program. But we have faculty that have worked with us from sociology, political science, psychology, anthropology, even a history professor, Gordon Chang, who studies Chinese versus Taiwanese railroad history. And so we work with faculty from all over the university to understand these kinds of governance and financing and sustainability challenges. So the three broad areas we work in are governance of institutional investment. We see that, in particular, pensions and sovereign funds are some of the world's biggest pools of capital these days. It's been estimated there's $100 trillion of potential investment money sitting in those kinds of institutional investors. They have been relatively small investors in infrastructure, something like 5% or less of their portfolios. And they've been passive investors. They go through intermediary managers who charge typical private equity fees. And some of the more sophisticated big pensions and sovereigns are becoming direct investors in infrastructure. So my colleague Ashby Monk is an expert on this and works with many of these kind of organizations, helping them to unleash some of these hundreds of trillions towards direct investment in infrastructure. And so these are some of the things we've been looking at in that field. On the other side, we've been looking at public sector governance. How do national, state, and local governments make decisions about infrastructure investment? What fraction of their total GDP? How do they prioritize projects? Is it a legislative free-for-all, or is there some more rational prioritization of projects? Australia is a good example of the latter. Maybe our country is more of the former. And so the third part is looking at actually the projects themselves that bring this money into the infrastructure space. And of course, infrastructure is a vital and huge need around the world. It's been estimated the need for global infrastructure is in the tens of trillions of dollars per year around the world. Africa's population will double in a few years. Southeast Asia, you're going to hear about One Belt, One Road, is going to also dramatically improve its investment. And these projects reduce transaction costs in society by making trade and commerce and travel easier, and by creating opportunities for export and import. And then the latest initiative we have is something called digital cities, where cities around the world are collecting so much data that you can almost view this data as a new kind of infrastructure. People have talked about data being the new oil, with artificial intelligence able to exploit this data. And so we're looking at how cities can be custodians of this data. So to get to the topic at hand, though, we've been studying Chinese investment overseas for a number of years. In the 2006-07 timeframe, roughly, the World Bank funded a study that we did where we looked specifically at Chinese investment in Africa. And we studied multiple projects, including visiting some of those projects, including doing research in China on the way the projects were financed. We submitted our report to the World Bank, which subsequently published a study on this. And now currently, we have a new grant that comes from both the Smith-Richardson Foundation and Stanford's SEED program, which is looking at Western versus Eastern development paradigms. And this study is being done in a different way. We started off with a roundtable of experts from public sector, from the multilaterals, from the institutional investors, and some of the developers, you know, the Bechtels and the other big engineering companies that work in this space. Following that, we developed guidelines for a set of case studies. And so this set of case studies is ongoing. We have 11 that are pretty much complete that you'll hear about from my colleagues. And just to give you an idea, from this roundtable, the most obvious thing that emerges is that there's a huge difference in the extent to which there's alignment among the government and the banks and the developers in China, where things are very well aligned in China. You're almost dealing with China Inc. when you look at these development projects. The projects come pre-financed. The construction companies don't necessarily have to be profitable. At least this was the case years ago. And it's really part of a coordinated national strategy. Whereas in the US, what we're looking at is a complete lack of alignment. Infrastructure's fallen out of favor to some degree at the World Bank in the last few years compared to other kinds of initiatives that are perhaps lower risk in some sense. But the World Bank is recognizing and actually currently revamping some of its policies, which you'll hear more about later on also. And the other thing is this uncertain shifting status of the US Export-Import Bank, our major export credit agency, where currently it's unstaffed and there are projects sitting waiting to be released. And so there's a very big difference there. And so what has happened over the last decade, and Michael Ben and my colleague will show you some statistics, a huge, huge shift in who's actually building infrastructure around the world. especially in developing countries. So the questions we have, we wanted to explore in more detail this difference in philosophy. We wanted to document the difference in the institutional approaches for choosing projects, financing them, developing them, operating them. Look at the host nation's point of view, when they think about who should do our project, should it be the Chinese, or should it be somebody else? How does it look from their point of view? You'll hear from the case studies the way these things unfold. We'll try to find best practices, and I hope nobody views this as being sort of a China bashing story. The story is that they're very good at what they do. And the World Bank and the other multilateral banks have gotten so slow at approving these projects that the developing countries with their burgeoning populations just lose patience. And so the way we're doing it is what, in the academic world we call grounded theory. That is, we do a bunch of cases, we let the cases speak to us, and then we bounce that against the existing literature to see, are our findings compatible or different or a refinement of the existing literature? And we're in the middle of this process, and just to give you an idea where the cases are, you can see they're scattered around the globe. I'm afraid the world map's not showing up very well on this slide, but you can see here the countries. So we've got Latin America, 2 projects, one in Ecuador, one in Peru. We've got in the Caribbean, one in the Bahamas, one in Jamaica, or actually a couple in Jamaica. In Ghana, we have a project. We have one in Congo, Uganda, so 3 in Africa, 1 in Eastern Europe, in Croatia. And then in Southeast Asia, we have a project in Malaysia. We have one in India and one in Sri Lanka in South Asia. So these are the case studies you'll hear about from my colleagues now. So I'm going to hand off now to Michael Bennon. Michael is the manager of the Global Projects Center and also a very active researcher in the governance and policy aspects of infrastructure. So Mike, please come up.
Great. Thanks. Thanks very much, Ray. Thanks very much to CSIS for hosting us today to present some draft research findings. So that, we see this as a great opportunity to kind of put some unpublished findings from our research out and to get some great feedback on a few of these topics. Just in terms of what we're going to talk about, just for the next session, so Bushra and I were going to give a few findings from our case studies and our thesis going into the research project. And then I think that'll be well paired with John, who is kind of going to be presenting a little bit on the Reconnecting Asia project and some of the more recent developments. So as Ray kind of mentioned, for our project, we were mostly focused on cases that had some outstanding results. So some of our projects are generally a little bit older than what might be included in some of the newer projects like One Belt, One Road. So in terms of what we're going to talk about today, so I'll talk a little bit more about our process and why we were interested in the topic, and then kind of introduce our thesis or our framework for analyzing some of these projects. And then Bushra is going to talk for a few minutes about some of our specific cases, in addition to some of our broader findings, and then I'll kind of close up with some implications, and we'll look at the Reconnecting Asia project. So why were we interested in this topic? So clearly, as most people in this room probably are aware, there are new players in developing economy infrastructure finance, at least from the multilateral and bilateral perspective. So this shows several multilateral lenders to developing economy infrastructure, some bilaterals as well, and their total assets, just to kind of be illustrative of the trend. And as you can see, there are a couple of new players, the China Development Bank and the China Export-Import Bank, that have risen from relative obscurity to a relatively large share of the developing economy infrastructure market. Now there's a little trick here in that this data is from 2002, so it's a little bit dated. So now you can see the growth of that trend in a relatively short period in terms of the size of total assets for those lenders. And this is my last trick. That's also a little dated information. And if you fast forward to today, you can see the trend. So again, this is just the total assets of these institutions, so it's illustrative. But you can see kind of the trend. Now, the other caveat I should mention here, so the China Development Bank, about 70% of their portfolio is to projects within China, which still currently is considered a developing economy. So while the China Export-Import Bank is all overseas. So that accounts for part of that growth, but you can see there's a pretty sizable trend. So what I wanted to do before we get into our thesis, I wanted to talk for a few minutes just about some common explanations or drivers of this trend and address each of them very briefly. As Ray mentioned, so our methodology here, we had students going to look at different case studies. So it was a great project for our grad students because there was travel budget. So we kind of sent a bunch of them to write case studies on these projects. Some of them are already online. This was a joint project between our center and the CDDRL at Stanford, so the Center for Democracy, Development, and Rule of Law. And so the co-PI with Ray on that project is Francis Fukuyama, who runs that program. And some of these case studies are already online with some of the specific findings. So just to kind of address these topics briefly before we get to our thesis. So the authoritarian advantage is a term, it's a well-documented term basically that infrastructure development is a little bit harder in democracies. And so it's fairly well-researched. It's certainly a factor to this trend. So things like eminent domain, community consultation are simply a little bit easier in more state-centralized economies. And that's fairly straightforward. What's interesting about this trend is that while that is a good explanation perhaps for very large infrastructure projects within China, some of this trend is investments by policy banks in liberal democracies in addition to more kind of authoritarian regimes. So it doesn't necessarily completely explain this trend in developing economies where it's not within China, so there's not that same kind of ability to get around local regulations. Strategic international competition is another very commonly cited kind of trend or driver within the media. So this is the basic idea that infrastructure lending can be used as kind of international bargaining and within geopolitics. I included a couple of recent headlines here. The one which some of you may have seen from The Economist is more, they use the term sharp power. It doesn't really focus, and this was just from Friday. It doesn't necessarily apply to infrastructure, but maybe it relates to this a little bit in that part of it was actually focused on pressure on academics who give presentations related to China, so which that kind of overlaps a little bit with our discussion. So I think our free vacations to Beijing might be in question if something to that effect. But so this is clearly a factor, right? This could create some incentives for kind of top-down general strategy around infrastructure lending. And further, there's some evidence of this in other studies. So for example, there's evidence that some countries in Africa that have received more lending for infrastructure kind of in the early to mid 2000s also supported other initiatives that were of strategic importance to Beijing. So there is some evidence that this provides some general top-down kind of direction towards infrastructure lending. But the results are certainly also mixed. So what we're going to talk about some today is that some of these lending programs can also even hurt relationships with the economy, and there's some evidence of that more recently in some of the case studies. So it kind of depends on how the projects go. Also, just fundamentally, infrastructure for kind of strategic leverage, I think just as a topic or kind of fundamentally, Potential lending for infrastructure is certainly a tool for geopolitical leverage, whereas existing infrastructure very fundamentally does not. So once you invest in a project in a developing economy that doesn't necessarily tie geopolitics when you compare to, say, how the West has predominantly built geopolitical relationships through the provision of security, which can be taken away and infrastructure cannot. So definitely a high-level driver, but maybe doesn't completely explain the trend. And then another big driver of this trend is domestic industrial policy, certainly. So China underwent an incredible build-out of its local infrastructure, and now currently has a very large construction industry with not a lot of projects to build. So it's good domestic industrial policy to essentially support those companies in competing for developing economy infrastructure. And so this is a long-standing policy, and it certainly makes sense in terms of a domestic industrial policy, certainly a kind of high-level driver of the trend. Again, it doesn't necessarily translate directly into policy. Furthermore, just like any other export credit agency or multilateral lender, China's policy banks aren't designed to be kind of loss-leading institutions. So while this clearly is a driver, we kind of identified that there was something a little bit more fundamental in kind of explaining this trend. So now I'll get quickly to our thesis. So the framework in which we're kind of analyzing this trend in developing economy infrastructure is cultural. So different cultural approaches to infrastructure development, and specifically within our framework, we define a Western approach to infrastructure development, which is transactional in nature, and an Eastern approach to infrastructure development, which is relational in nature. And I'll talk a little bit about what that looks like and how we define it in the framework. So under a transactional approach to infrastructure development, projects are evaluated based on microeconomics. So benefits of the infrastructure project have to be greater than the costs. Under a relational paradigm, as we've defined it, developing economies essentially will develop. And that's the natural growth of development. And so individual project outcomes might not be as important as developing a program of projects and kind of getting projects underway. Under a Western or transactional approach, of course, there's a very rigorous upfront evaluation of a project because the benefits have to be better than the costs, and we want to make smart investments. And also, those evaluations should account for externalities, so social and environmental costs of infrastructure development. And also, in that evaluation, local communities should be consulted in part of that evaluation process. I think under this relational paradigm for infrastructure, I think there's more of an emphasis on time as a success factor for infrastructure, so development time. And we call it a compounding effect on infrastructure because development time for a major complex infrastructure project is correlated to every other outcome. And any major infrastructure developer recognizes this. So development time is correlated to cost overruns. It pushes the economic benefits into the future more so that it's less economically beneficial. Time delays are correlated to more time delays, and potential cancellation. So it's a huge factor in infrastructure development, and there's just more emphasis on that in this relational model. Because it's relational, there's the idea that partners in a project is a way for a partnership to be formed, and there's a focus on addressing risks during development, as opposed to, for one of these very complex infrastructure projects, trying to sort out every single possible risk from the outset. There's more of a focus on kind of sorting it out through the partnership, because it's impossible to forecast the future. There's more of an emphasis on mitigation through partnership, as opposed to veto of externalities. And then the last factor, which we'd highlight for the transactional, of course, is financial viability. So there's much more of an emphasis from the Western multilateral and bilaterals to make sure projects are financially viable, and there's much more study up front and also more time and approval of loans for projects. So that's the framework. And the reason we find that very interesting is because an infrastructure project sits in a very unique location along that spectrum. So infrastructure projects are decisions, they are transactions that governments make, but they're also in some ways relational. They kind of sit on that spectrum in that they are some of the most complicated things governments do. They take multiple years that sometimes span political horizons in democracies. So they're in this kind of gray area between a specific transaction and a relationship that we find interesting. So I think what I'll do is I'll turn it over to Bushra to talk about a few of our findings and specific case studies, and then we'll go over kind of implications of these trends in a few minutes.
Great. Okay, so to further explore some of our theory around Western and Eastern paradigms to infrastructure, we visited the literature and did a literature review, drawing some of the key factors from the extant literature. One of the main literature around relational versus transactional paradigms is that many of the economic exchanges are driven by relational and cultural norms. So it's not always around commercial viability across the microeconomic, social, and environmental costs. Another main factor in the literature is the obsolescing bargain, meaning that once firms have invested in capital cost, they're at an inferior negotiating position, and so governments can then renegotiate on some of the original commitments. Another main factor for infrastructure especially is optimism bias. Often there are infrastructure cost overruns when, for example, demand forecasts fail to materialize, and post the kind of initial boom around construction, the project can become a draft on the economy at a more macro scale. For transparency and comparability, this is a major factor when we're discussing Western and Eastern paradigms. Not only the need for more transparency and information sharing, but really the issue that a lot of the financial categories are categorized differently, and so there are issues of comparability. So not only clarity around quantifying, but also using the same terminology and the same constructs and indicators. And for compliance and safeguards, there are huge concerns over varying standards of social and environmental safeguards and compliance, and whether we import sort of a set of standard environmental and social safeguards, or do we match local sort of required needs for safeguards. And so to match these, we, as mentioned by Professor Levitt and Mike, conducted case studies. We have a number completed. By the end of the project, we'll have about 20 ranging across some of the regions that you see on the slide. And I won't go over it too much because my colleagues covered this, but our graduate students went to the locations and interviewed sort of key people from the public sector, private sector, civil society, and the communities around these infrastructure projects. And what I'll do is I'll feature some of the cases that have been completed. A lot of these are online. And the ones that we've wanted to feature for today, we tried to select ones that had both sort of Western paradigm activities as well as Chinese activities, and try to look at some of the key distinctions to draw some of the initial takeaways. And so one of the main ones I would like to discuss at the beginning is the Highway 2000 project in Jamaica. As you can see from the graph, it's a two-phase project. The first phase is an east-west portion of the highway. The second one is a north-south portion of the highway. It's a 1.3 billion transportation public-private partnership in Jamaica. It was started in the late 90s and has undergone sort of extensive assessment and studies since then. The interesting thing is that the phase one was internationally tendered, and the bid was awarded to a French contractor. And it began in 2001 and was structured as a 35-year concession. And this was initially financed by commercial banks, and then facing some cost overruns was refinanced in 2011 with a consortium of development banks, including the International Finance Corporation and others that you see on the slide. For the north-south link, this is a shorter distance, larger cost project. This was instead an unsolicited bid that was awarded to China Harbor Engineering Company, which began in 2012, and it was structured as a 50-year concession. It came with a loan from the China Development Bank, along with land rights that are adjacent to the project. I think some of the key distinctions here, to begin with, are project sourcing. Again, the phase one was an international tender and was awarded to the French contractor, versus the unsolicited proposal that was originated in 2011 by CHEC to take over sort of phase two from Bouygues. And so and for the financing, again, this was the first project was refinanced in 2011, and with the refinancing came a re-examination of some of the environmental and social safeguards, and they were in fact pulled to some higher standards. And for the financing on the phase two, it was a $610 million investment from CHEC and CDB, but also included a reimbursement to the government of Jamaica for some of the cost overruns that happened in phase one. These cost overruns were mostly to geotechnical issues, so they fell on the government of Jamaica's side. And phase two, the contractor did not decide to execute, although they had the sort of right of first refusal, mostly because of project viability issues. Whereas on the Chinese approach, kind of moving full force ahead with some issues, namely around unresolved environmental concerns after receiving some notices from the Jamaican National Environmental Protection Agency. Jamaica's Office of the Contractor General also issued a statement that the project, the phase two of the project, couldn't be implemented on a commercial basis, but under sort of the deal structured by China, it's moving forward. I chose to include a couple of quotes here to capture some of the rhetoric, I think, around the two paradigms. I think what you'll see from the French contractor side is highlighting sort of the official tender, the competition, and the fact that there are the necessary guarantees to make this a viable sort of transaction. Versus on sort of the China Harbor Engineering Company, I think the rhetoric is more around sort of relationships, mutual trust, and the high potential for growth in a project like this one. I'd like to feature a second case study now. This is the Inga 3 hydropower project in Democratic Republic of Congo. This is going to be one of the largest sort of hydropower projects. It's estimated at $12 to $14 billion with 4,800 megawatt plant. Along the Congo River, there's already Inga 1 and Inga 2 that are much smaller sort of hydropower projects that already exist. This project is expected to displace 35,000 people in its initial phase and potentially 25,000 more in its later phases. So I think the Western approach here, the World Bank was involved early in the project and granted a technical assistance grant for $73 million. And it was aimed to support sort of a government-based development strategy to structure this as a public-private partnership. And the funding was then suspended 2 years later over sort of strategic differences in the direction of the project. With the decision around the grant for the technical assistance package to begin with, the United States had abstained sort of from that decision, citing significant implementation risks associated with this project. There were, however, 3 bids that were submitted sort of for this project. One of the main ones is a China-led consortium led by the Three Gorges Corporation and Sino Hydro, and they built the sort of Three Gorges Dam in China. And the second one is a Spanish-led consortium, and the third one was a South Korean-led consortium that withdrew in 2006. So there's 2 remaining consortia now, and they're currently trying to decide how best to proceed. I think some of the key distinguishing factors here are really around the social and environmental safeguard issues. I think for the Western approach, there are very strict safeguards and sort of a tendency to avoid large hydro projects, and the environmental and social impacts, as well as the displacement issues, being sort of a huge deterrent. Versus sort of the Chinese approach, where having built the Three Gorges Dam, et cetera, there's experience in doing this. It's not as much of a deterrent. And it's expected that for this particular project, the environmental and social impact statements are not going to be completed before the start of construction. And in terms of strategy, there's sort of disagreement that emerged, as we saw from the World Bank, over the strategic direction that the project is being taken on, but then overall sort of a fairly fragmented approach to power in Africa and increasing sort of access to electricity in general, versus the Chinese approach has been heavily invested in the Democratic Republic of Congo already, with a pretty famous $6 billion mineral for infrastructure deal sort of prior to that. With the financing, the World Bank funding was suspended for strategic differences, namely around when the president sort of took over control of the project from the Prime Minister's office, and it was sort of strategically changing directions. The financing on the Chinese approach is currently unclear. The Democratic Republic of Congo government is requesting that potentially the bids be merged, so we'll see what that might look like. I think some of the focus of the World Bank Group is sort of differences over the strategy versus when sort of you look at the head of the Grand Inga project, they're discussing maybe the benefits of going with the Chinese companies or the Chinese-led consortium, and you sort of, I think this quote is quite interesting in that the Chinese companies said that they could finish it in 5 years, and if they're free to do whatever they want, they could even do it in 4 years, and again, highlighting sort of development timelines and speed of delivery. The third case I'd like to include is the Colombo Port City project in Sri Lanka. This one's part of the One Belt, One Road initiative that you'll hear a little bit more about from in a bit. And it's a port and real estate development sort of mega project. It's by far the largest foreign direct investment in Sri Lanka from China at about $1.4 billion. There's not as much of a Western component in this particular case per se, but some of the existing loans in Sri Lanka are fairly small sized and focus on somewhat incremental infrastructure improvements, urban planning, education, et cetera, from some of the institutions and multilaterals that you see on the slide. The Chinese approach is sort of very visible in this particular context, where Chinese state-owned enterprises are heavily involved in Sri Lanka, with over $8 billion invested since 2006, mostly in unsolicited proposals. And there have been major transparency issues around a lot of these investments, particularly with Sri Lanka's previous government. So I'll highlight the Chinese approach here mainly, and that again with the project sourcing, this was an unsolicited proposal by China Communications Construction Company, CHEC. The one I mentioned is a wholly owned subsidiary of that. CCCC was debarred by the World Bank for fraudulent practices between 2011 and this year. This project was sort of heavily matched with political cycle shifts. The Colombo City Port project was hastily signed sort of in 2004 by the previous government, and the launch of the project was attended by both nations' presidents, sort of very timed very close to when the former president of Sri Lanka was running for re-election. He was not re-elected, and the winning opponent's platform was addressing a lot of the white elephant infrastructure projects and highlighting the need to sort of improve relations with India and the West. Shortly after the elections, the project was then suspended, citing environmental regulatory violations, but then it was resumed 1 year later, mostly because of a lot of pressures, but then it was also a signed deal, so they were incurring fees because of the pause on the project. The deal includes a lot of land rights to China, both freehold and leasehold. The leases are 99 years and freehold is essentially much longer term. And I think what's interesting to see here is that from Sri Lanka's Prime Minister trying to highlight that this isn't a China-Sri Lanka project, but trying to also garner interest from India and other potential investors. And I think what's interesting, again, with the rhetoric on the China Communications Construction Company and some of the Chinese state-owned enterprises that we see is, again, highlighting sort of the projects being as a symbol, highlighting limitless opportunities and unmatched potential for growth, et cetera. So I wanted to feature some of these cases to show, I think, some of the key factors that we had seen across some of the infrastructure projects that we've been studying. And I think for the Sri Lanka case, it's really part of a very extreme example of the Chinese approach at the country level. And so I'm going to pass it back to Mike to highlight a little bit more on Sri Lanka and then tie it back to some of our key takeaways from the broader set of cases.
Okay, thanks. Great. Thanks a lot. So as Bushra mentioned, we'll just highlight a couple of findings for a couple minutes before taking a look at the newer database projects. So we just wanted to highlight Sri Lanka in part because it's been in the news this week, if you follow this news a little bit, but also because one of our kind of findings from this, as Bushra alluded to, is that these two paradigms or approaches to infrastructure will kind of become more extreme over time. So the transactional multilaterals become more transactional over time. And more the relational paradigm naturally leads to additional projects, so it naturally leads to a program. But you can see basically initial investments in Sri Lanka under this program started out relatively modest. There's some energy, some road network projects, and then there was a major port project which was invested in a few years later. So and this is definitely not all the projects that have been developed in Sri Lanka over the last 10 years under this paradigm, but you see more projects being kind of begat by initial projects. There's airport projects in Sri Lanka that are cited as some very negative project level outcomes, kind of like ghost airports almost, or there's roads, some of these road projects which reportedly have more elephant traffic than vehicle traffic. But those are individual project outcomes as opposed to a program. So you had a major port project, which there was some kind of a renegotiation, which received some kind of negative local outcome in terms of the interest rate on the loan at one point, in part because there was a program of projects underway. More road projects kind of in the central project, so potentially loss-making at the project level investments. But then you also have some of the Colombo port projects coming in after. And now, of course, the Colombo Port City, as Bushra mentioned, a major development, land development within to kind of build the potential viability of this system of infrastructure. But you then also have some negative outcomes. So you have about $8 billion of debt build out for these infrastructure projects over a relatively short period, which is now in kind of a renegotiation. So this is kind of a good example of where that paradigm can lead to potential overbuilding in some cases. And this is just from this week, where they're kind of renegotiating some of that, converting some of that debt into a lease of one of the developed ports for 99 years. So in terms of what you'd expect to see from these two outcomes, we've talked about it a little bit, just to highlight a couple of others. Much faster lenders' risk assessment under the more relational paradigm. You would expect to see more renegotiation, right, under that paradigm as the project's ongoing. You'd also expect to see more patterns of projects like what we just highlighted. Under a more transactional paradigm, you'd expect to see almost like an export of different review processes. So adopting the processes of the multilateral as opposed to adapting to the local review processes for projects. And then in terms of just very briefly kind of trends and implications, so again, one of our findings is that these will continue to kind of move along a spectrum. Without a structural reform, we would expect transaction costs in Western institutions to only just increase over time without a structural reform. So this is an example of the World Bank, which, as some of you may be aware, is reforming their environmental and social review processes. So kind of without a major kind of reform event, which is what they're currently undertaking. You can comment on it now. I think comments are still open on this process, which we find to be a good example because they've been working on it for 6 years. It goes into effect this year, which is kind of like a meta, review of the reviews. So it's kind of a good example of transaction cost growth in kind of this transactional approach. And then furthermore, as we mentioned, under this relational paradigm, you would expect projects to beget projects. And that's irrespective of whether the initial projects work out well. So if there's a non-performing loan or an individual investment that doesn't do well, there's almost an incentive for additional investment. And so you can see that naturally drives growth in lending for those programs. And without a structural reform, our thesis would be that this just continues that growth. And so one of the other interesting findings from this, so again, these are just reported figures, this is a documented phenomenon more locally within China, the specific idea that project will beget more projects and that it will continue to grow. There was, of course, kind of an overbuilding within China. There was a very rapid build out, which led to a lot of economic growth. But then there was a period of kind of overbuilding domestically. There was a reform process within China where the national government kind of went through and sorted out some of the bad projects and bad loans with local governments. And that was a process that happened and that the kind of central government managed. What's interesting with this growth is that these are sovereign counterparties. This is a very different situation than where you have a national government that can kind of come in and address bad investment decisions by local governments. It is a different scenario. So there was a recent cash injection for some of these policy banks, just in terms of the adequacy ratios for some of them were quite low, so below Basel standards prior to the injection. So there is clear that there is some bad lending decisions happening with that growth, which is a natural part of kind of rapid growth of any lending program. And then just for reported ideas, there's also signs in terms of kind of reported loan impairments that there's potential non-performing loans in some of these portfolios. Just in terms of conclusions briefly before we look at the database. In terms of some of our recommendations, clearly there's these two paradigms. There's things that they can learn from one another. And the idea is that would require some structural reforms to change those. So either a major reform like what the World Bank's undergoing to kind of reprocess its reviews, or some other structural reforms. Otherwise, they're going to continue to kind of increase. And then the other conclusion, of course, that we want to highlight is obviously if we're optimizing for host nation or developing economies, the ideal is that we could, through capacity building and the acceptance of global norms, there are certainly issues that are clearly optimal, which is, of course, transparency, anti-corruption or corruption prevention, and a level playing field for competition in developing infrastructure. So that is a kind of a global consensus that has to occur, and in the meantime, there's going to be different paradigms until there's some kind of global consensus around those issues. So that's some of our findings. Maybe I'll turn it over to John to go through the database project.
Great.
Thanks.
Yeah, thanks. Okay.
Here, I'll go over here.
So as Mike alluded to, and as Matt mentioned in his opening, we have a database here at CSIS that we've been working on for about 3 years now, 2 years, 3 years. And so I'd like to, for the first time, actually share some initial findings with you, just broadly speaking, about what we're seeing across the supercontinent of Eurasia, which is the geographic scope of our project. Mike and Bushra, I think, bring a lot to this with the case studies, and I think you need to look at individual projects if you're going to understand something as massive as Belt and Road. I'd like to take a step back and just give you a bit of a sort of regional overview, all with the caveat that this is very much a work in progress, like the projects that we track, and I'll return to that at the end because we are really looking to improve our data, and this is all based on open sources. We have a team of 6 researchers who are literally entering project data every day. But Even with all of that help, you can't cover this whole area. And so I'm going to ask all of you at the end for some of your help. What we're looking at right now is a snapshot of an interactive map that's on our website. We're tracking about 2,200 projects, and for about a third of those projects, we have geographic information. Our data spans 2006 to the present, and so far we've focused on transportation projects, so roads, rail projects, ports, and dry ports. We're hoping to expand in the future to also cover ICT infrastructure, energy pipelines, power plants, and so on. And what I'd like to do today is show you basically 3 areas. First, where is this activity happening? What are the hotspots? Who are the biggest funders? Second, I'd like to talk a little bit about openness. This is a broader issue that often comes up when we're talking about comparing different approaches to infrastructure. And so I'll share some data with you that compares the participation of contractors in Chinese-funded projects versus the participation of contractors in projects funded by the multilateral development banks. And finally, I'd like to just say a word or two on transparency. As I mentioned, all of our data is based on open sources, which can be incredibly frustrating at times. But as I'll show you, I think sometimes even the blind spots can actually shed some light. So to give you some context, we have in our entire database right now about $1.5 trillion of investment that we're tracking. To put that into context, the small white circle in there is the equivalent of the US Marshall Plan in today's terms, which is about $130 billion. But before we get too self-congratulatory, this is the infrastructure gap that the Asian Development Bank has estimated exists just in developing Asia between today and 2030. So this is a good slide to show your boss if you work on these issues, because you're going to be relevant for a while. So we have quite a bit that's coming down the pipeline. We know that the spending is about half of that infrastructure gap. So in order to meet the gap, countries would have to spend about twice as much. So whether they do meet the gap or not, there's quite a bit of activity that's on the way, and that'll obviously impact many of the trends that I'm going to show you. So starting with the big picture here, this is a snapshot of where that $1.5 trillion is and how it's distributed just across the geographic scope that we're most interested in. So I think a few things jump out here. We often hear about countries sort of aspiring to be new hubs on the new Silk Road. That's an aspiration that many countries, I think, have, and not all of them will realistically be able to achieve. But just in terms of spending, we do see a number of countries, Kazakhstan, Iran, Georgia, and Turkey, all making progress, attracting quite a bit of investment and also spending pretty heavily domestically. You can also see, though, that there are gaps in the middle of this landmass. And so it's certainly possible that as the continent reconnects, or if it reconnects, there could be some gaps that are left out. And I think obviously it won't come as a surprise that China is certainly a leading investor, both in terms of beyond its borders and also within its borders. This is China's Belt and Road, which I think some of you have probably seen a version of this before. This is, I think, probably the most ambitious economic vision today. And you can see that I think one of the most ambitious dimensions of it are these new overland routes, which are really trying to create trade where these connections have not existed for hundreds of years, or not existed in a significant way. And in doing that, they could shift some commerce from the maritime space inward. And so one big question, I think, is what's happening in these corridors? And so to get a brief to begin to start to answer that question, not to fully answer it, because I don't think we're there yet. This is an ongoing initiative, and I think there's more that we can do with our own research. But to start to answer the question, we're looking at investment in corridor countries, so countries that are part of one of the 6 corridors versus countries that are not. And so I think you can see it a little bit visually here. We've got the corridors sketched, and then we have funding amounts, Chinese investment in different countries. And I think there are a few exceptions. Obviously, Mongolia is a corridor country where the investment is pretty low, but there's actually a pretty good amount of alignment between the corridor countries and where we're seeing investment going. So in our data, we see about 1.7 times more investment in corridor countries than we see outside of them. And I think that's an interesting question, not only economically, but also strategically, because if this is a coherent vision, you would expect to see more coordination, more investment in the corridors that the vision is claiming to advance. I think this is also a reminder that for all the excitement about Chinese investment beyond its borders, China itself is still the biggest part of Belt and Road and where we have the most investment, at least in our database. China, I think, gets quite a few headlines these days, but it's obviously not the only actor. This is a map of leading funders for each country. And so, if infrastructure projects were votes, this would be sort of an electoral map of what the region looks like. A few interesting things jump out here. I think this picture will continue to change quite a bit. But I think it highlights you've got at least 3 areas of pretty intense competition. You have competition, both in Southeast Asia, where, at least in our database, Japan is even outspending China in quite a few countries. I think that's something that people often overlook. You've got some competition in Central Asia, where you have multilateral development banks and China both heavily involved and quite often cooperating on projects as well. And then you have Eastern and Central Europe, which I think is an emerging area where you have probably these paradigms meeting in a very interesting way. And so I think if you take one thing away from this kaleidoscope of a picture, it should be that there's many actors involved. This is not just a China and everyone else story. It's quite complex, and I think that our analysis certainly needs to reflect that. One of the concerns that people have raised about some of the Belt and Road projects is that they might not meet the EU standards, for example, if we're thinking about Central and Eastern Europe. And 2 common concerns are openness and transparency. And so I'd like to turn to those questions just briefly. One measure of openness, I think, is the degree to which competition is open and fair for participation in projects. And so we've looked at, of all of our China-funded projects, where the contractors are associated, so based on the headquarters of the company. And let me, the caveat here is this is just infrastructure projects, just transportation infrastructure projects, and the contractors we're looking at are contractors involved with those construction activities. So this is not capturing the services dimension, it's not capturing energy projects, so it's a slice, but it's what we've got, and I thought it would be interesting to share. Now, out of all the contractors that we have for China-funded projects, you can see that over 80% of them are Chinese, but you can also see that in the multilateral development bank projects, over 20% are Chinese. And so I think that speaks to the fact that there's actually, for all the talk of competition, there's quite a bit of cooperation in these MDB projects. And China is quite competitive, at least for transportation projects. Obviously, I think there's an important element here that jumps out with a much higher level of foreign participation in the MDB projects and a higher level of participation among local companies where the projects are happening. One other experiment that we've been running, and this gets to the issue of transparency, which is, I think, very difficult to track because it's tough to know what you don't know. And so on each of our project pages, we have a series of data fields. And essentially what we've done is we came up with a score sheet for projects based on the level of the status of the project. So, for example, if a project is just announced, we wouldn't expect it to have the completion data or as much data as a project that has completed would have. And so we've run this analysis, and what we found was that there's actually almost no difference, at least in our data, between China-funded projects and multilateral development bank projects in terms of the amount of information that we have. So all of them out of our score of 100, we're getting Bs and B minuses. And so I think, but again, you have to ask yourself, we don't know the projects that we don't know about yet. And so one way of getting to that question was to look at how many projects we had at each status level. So we track a whole series of statuses, everything from announcement to completion or cancellation. And I think something that jumps out here is that for our MDB projects, we have, I think, a little bit more of a diverse collection of projects at different status levels. For the China Development Bank projects that we have, we don't have any announced projects. So that's the earliest stage that we track. We have many more completed projects. And so we know more about the China Development Bank projects when they're further along. And we know, a bit more about some of the MDB projects earlier on. And I think that gets to, the questions of transparency and also maybe fair competition or an opportunity to participate. Obviously, these distributions could change in the future, and I expect that they will. Funders can become more transparent. And to be fair, we have, certainly space to improve our own data collection efforts. And that actually gets to the last point that I'd like to make, which is that we have a really talented team here, but as I said, we're covering a huge space. And so partnering with people like the Stanford Global Projects Center and others, including the MDBs, including partners in China, we're trying to improve our data. And so if this is something you cover either as an analyst or as a data collector or as a participant in the private sector, we encourage you to reach out to us and to talk about, we have, I think, a whole host of ways that we can work together. On our website, we have a link at the bottom of every page. So this is at reconnectingasia.csis.org. And you can click on Help Us Improve This Site, fill out a form, and then we'd love to talk to you about how to partner. So I will leave it there. And actually, we're going to have, I think, a brief question and answer period. And so I might actually take the pleasure of asking the first question of Mike and Bushra. Let's see. Yeah, so one of the projects that you mentioned was the Hambantota port, which has been in the news recently. And I think it's interesting because it certainly highlights in your relational paradigm the tendency perhaps for projects to be renegotiated. And I was wondering, given how that project or where it stands today, it certainly feels to me, and this might be, not understanding the transactional definition, but it feels like there was a transactional conclusion to that where, the funder took equity in a port. It now has a 99-year lease on it. And so I was wondering if you could talk about that. Is that something, could a project start off as a relational project and end up as a transactional one?
Yeah. I think, and I should just add, there's not a ton of publicly available information on exactly how that transaction sorted out. I would still frame it as definitely very relational in that, in that the new prime minister kind of was elected and ran on a platform of kind of not necessarily an anti-Chinese investment platform, but more of a rekindling other ties platform. And they started the renegotiating progress, as Bushra mentioned. They had a kind of an $8 billion debt overhang, some of which was certainly sovereign debt. So they had issued guarantees for some of these projects. Sri Lanka had. And so it kind of illustrates in that for a lot of project finance infrastructure projects, a road is fine, or other port is financed on its merits. So if the port, if a road is truly financed at the asset level, if a port is not can't pay back its loans, the port defaults, not Sri Lanka, right? And so in this case, there were clearly some sovereign guarantees that were included in some of that lending, although some of the information is not, some of the information on those loans isn't necessarily public. In the case of the renegotiation, which we would expect to be more common, clearly here there was There was debt that was under a sovereign guarantee used to build a port that is not, let's assume it's not economically viable currently. And there was a renegotiation where now that Chinese developer is going to have a 99-year lease on that port, but some large amount of debt was probably written off in leading to that transaction. So it's kind of more, it's illustrative of this process of kind of figuring it out after the outcome. And for a lot of infrastructure projects within China, the renegotiation rates are just off the charts in terms of the project is developed, there's an outcome, it's a good or bad project, and then there's a renegotiation. So it's very common under that paradigm. Yeah.
I would say the academic literature supports this as well. This is not particular to the Sri Lanka case at all. I think Gouache did a lot of research on this in terms of the renegotiation rates of a lot of infrastructure projects. It's fairly high across the board, fairly early in these 20, 30, 50-year concessions. And so I think it's fairly common for renegotiations to happen. And I think one of the key drivers of that is political cycles. It tend to be political cycles, and I think that was the case in Sri Lanka for sure. But I think one way to kind of mitigate it and lead to a more transactional setting, as you mentioned, is the ability to kind of, allocate land rights, shift between some of the different infrastructure investments that China has already implemented, so sort of cross-sector diversification and negotiating sort of with a wider range of options because there's such extensive lending and investing within that same sort of jurisdiction.
Great. Yeah, I think, even though, that Hambantota example is something that has been, I think, developing for years, in the news last week, and probably will be in the news again, maybe. We'll see. I'd like to turn to all of you now, and if you have a question, we should have some people with microphones, so please just raise your hand. We'll get you a microphone, and please just let us know your affiliation and your name. We can start right over here.
Hi, Chris McRae, Norman McRae Foundation. The analysis of the relation versus the sort of transactional viewpoint makes a lot of sense to me. I was wondering, however, has any of your research sort of linked together with the two big new development banks which have been growing partnerships since 2013, particularly the Asian Infrastructure Investment Bank, which has this annual summit where it gets 80 national delegations together, basically to look at projects which were completely unfundable in the past. And with India and China having been behind this idea of the new development banks, we're talking about 1/3 of the world's people looking at what sort of projects couldn't be funded in the past, maybe because of the sort of relation versus transaction conflict.
Yeah, and just for our particular data set, we don't. None of our case studies currently are from the Asia Infrastructure Investment Bank projects, mainly because it's new. So we were really looking at projects with outcomes that were kind of already in operation. So I think it will be interesting, and that is currently playing, my understanding is that's currently kind of playing out just in terms of what paradigm the AIIB will be operating under in terms of, and that's a broad characterization, but just in terms of they are certainly taking that approach to look at potentially like programs of projects within countries, but then that institution, my understanding is that institution is also, because of its nature, it includes a host of countries. It's not backed by just one country. Will provide a kind of a robust analysis of the projects that they invest in, as you mentioned. That's fine.
And I think the AIIB notably excludes the US, and I think it's indicative of also sort of a push towards South-South partnerships for infrastructure development, and China really wanting to be part of the sort of new international financial architecture. And I think it's going to be very interesting to track what types of infrastructure projects are pursued by the Asian Infrastructure Investment Bank. particularly in terms of like along the spectrum of relational and transactional where it'll fall, especially given that with these sort of purely transactional, a lot of potentially good projects really kind of fell through the cracks there.
That's a great question. Thank you. Yes, ma'am. We'll get you a microphone.
Hi, Orit Frankel with GE. So I really liked your analysis, and that really rings true with a lot of the things that we're seeing. We're also starting to see in various countries a bit of a pushback against China's approach because they don't take any of the social costs into consideration, because a lot of times they offer very low bids up front, and then, as you said, it gets negotiated up later, or there are projects that the quality isn't good, or they first say they don't need a sovereign guarantee, and then later, once they're halfway into it, they want a sovereign guarantee. So we see a lot of countries that are, saying they don't want Chinese participation in their infrastructure, although I think sometimes they feel like they don't have a choice, because, as you said, the West isn't necessarily providing a good alternative. But I wonder what you're seeing in terms of kind of pushback and how that's playing out.
Great. So yeah, are these recipient countries learning from their own experience, from the experience of others, and do you see that impacting how they might make decisions about whether to accept or not accept Chinese funding?
Yeah, I mean, of course, so I think you do see signs of that. Sri Lanka was one of the examples, I think, but I mean, the problem with that is that the outcomes of these projects are usually very long time horizon. So the time that it takes to determine that a project was or was not economically viable, or was a smart investment decision, or it was kind of renegotiated. There is a learning cycle that is extremely long, and that can kind of hinder that process. If you look at the case that Bushra mentioned on Jamaica, with the additional road project, the auditor of Jamaica was trying to write reports on the economic viability of this project, and they were just pulling their hair out trying to assess this project. They said, wait, we've determined it's not economically viable. Why are they willing to build it? And so it's just that kind of process. And currently, the reporting that is available is that the road wasn't economically viable, but there's additional investments going in that might make it economically viable in the future. And so it's just such a long process for that feedback loop that I'd say makes it difficult.
Yeah, and I mean, I think there is pushback, and often it's around environmental and social safeguards, as you said, and definitely issues of transparency and information sharing. That said, I think it's worth noting that it has been changing over the last decade or so. And so I think some of the pushback earlier on in terms of not hiring local labor, for example, or public perception of Chinese infrastructure projects, especially in Africa, you're seeing that a lot of that is changing, or some of the resource-backed infrastructure deals where it's infrastructure for copper or something like this. That's changing a good amount, where we're seeing that there is increased hiring of local labor. There's less of these resource-backed infrastructure deals. So I think it's improving, but the main issues around environmental and social safeguards, transparency, and certainly economic viability I think persist a fair amount. But to counter that a little bit, I mean, the optimism bias around cost overruns and infrastructure not meeting projected demand. There's also the counter, which is how do you appropriately assess also the potential value of a really large infrastructure project that's going to impact generations to come, and the option to not build isn't really a viable one either. So I think somewhere along the spectrum would be preferred, but worth mentioning that the landscape is changing significantly, I think, for the better for the most part.
Very good. Yes, okay, we've got a few questions over here. Maybe let's start with the second row. And actually, why don't we'll do 1, 2, and then respond. Thanks.
I'm Bob Hershey. I'm a consultant. To what extent is some of this on the internet as to the negotiation of the projects and who puts in what share and what they're demanding so that people can see it?
Yeah, it varies widely, and so in our research, it's all dependent on open sources. We get a lot of our information from the multilateral development banks, just because they tend to share more information in centralized locations. But we also use press announcements, and we'll also use satellite imagery to see if a project has actually started or not. And so it's the kind of there's sort of an art to just grabbing everything that you can. And trying to make sense of that information. But yeah, quite a wide spectrum in terms of what's available. That's been my experience. I'm not sure if it's been different for you guys.
It varies significantly from project to project. There's obviously a huge need for additional transparency.
Yeah.
I think, yeah.
I think that was part of the driver for doing sort of specific case-based research. And I think the renegotiation in general is often associated with corruption. Also, is it government-led or is it company-led? And I think it's generally pretty difficult to find information around renegotiations, which I think is part of why more of this type of research is needed.
And sometimes, when you're covering a landmass like this, there's also, we have people who speak different languages, and so we select for people who are going to help us with certain parts in certain languages. But there's also just this huge aggregation challenge where even if people are making the information available, it might not be in the same place. And so that's one of the valuable things we're trying to do, is trying to bring it together and let other people use it as well. Thanks.
Peter Bernardo with Peter Bernardo Consulting. One of the things I'm really curious about is the ability to evaluate economic development or economic impacts for a lot of these projects, and also the return that these Chinese organizations may desire, both short-term and long-term. As we all know, China is looking for access to natural resources, to ports, to infrastructure, to expedite their own development and actually act as export markets or possibly import of natural resources. A project like Jamaica may not be focused on tourism development, but it may be on bauxite extraction and then transfer back into the Chinese manufacturing sector. How do you approach this economic viability question? Is there a methodology that you use in your own work? Because I know from the financial side, from the banking side, we're actually looking for returns, right? It's a financial return, but it doesn't really address the factors of economic impact on a much longer term, especially when you start talking 99 years.
Yeah. So, there is a methodology for estimating economic impact, as I'm sure the folks in this room are very well aware of. And it's very, very difficult thing to estimate for a project like these, and it kind of goes to, in terms of the Jamaica project, I believe there was a quote in a news article where one of the investors in the project said, well, it's a 50-year concession, we'll make money after year 30, which from a transactional Western perspective, that doesn't seem viable. But in terms of the economic benefits of one of these projects, they are very difficult to estimate. And you're right, even at the project level, there are other cash flows, export benefits. Even in the U.S., we estimate we're going to create 10,000 jobs with this infrastructure project, and there's going to be these other external benefits. I would say that is part of the spectrum, which we find very interesting, because you can imagine that analysis in a extremely transactional approach being taken to infinity, trying to estimate those benefits. And so I think part of one of the findings is really finding the kind of sweet spot at which you can kind of determine that a project is economically beneficial and move forward, and that's never easy for one of these. I don't know.
There's a group at the Oxford Business School that's done some work on this that I know Ray and Mike and Bushra have worked with, but that would be another good resource to consult. Okay, we've got a question over here.
Great, thanks. Hi, my name is Nico van der Goot. I sit on the China desk in the World Bank. Thanks so much for your presentation. It was very, very informative, very, very interesting, really. One question I had is, so when you listen to Xi Jinping and his most recent announcement on the BRI, actually since the beginning he was saying that he wants the initiative to meet the highest international standards. So we've been receiving requests to work together on anti-corruption. Obviously our program within China has moved drastically towards green development, better environmental standards, something that the Chinese really care about. So I wonder now, do you actually see any changes, maybe more towards even a transactional approach in these areas within China? Earlier you've been saying that the approaches tend to become more extreme, but I wonder whether that's really true. Thanks.
Interesting. I see you nodding your head. Would you like to?
Sure. I mean,
Yeah, no, I mean, so just to respond to that, yeah, no, that is, so actually the thesis that we came up with related to that is that, which I guess I should just frame this is our thinking on the topic right now. I don't have like a finding yet to put my name against, but is more that that adaptive process is more that some of those Chinese institutions are doing a much better job of adapting to the local standards as opposed to necessarily kind of imposing their own program. So, for example, just when investing in host nations that have more stringent controls, they have the capability to kind of necessarily tailor to those standards more recently, as opposed to necessarily having kind of an imposed standards on some of those kind of social and environmental controls, but kind of developing the capability to do that. So that would be our assessment, or my assessment right now, maybe, on that particular topic. But it is certainly a developing trend. Yeah.
and I mean, I think, as Mike mentioned, some of these cases are a little bit older because we were trying to look also into some of the outcomes. I think there's definitely increased rhetoric about meeting higher standards. There's agreements being signed along the lines of that. Maybe some of the more recent cases will show that in implementation. That's certainly the hope, and we're definitely seeing more requests for cooperation, I think, as was mentioned earlier. So, I mean, I would agree, but our cases haven't fully captured, I think, where that's going.
Great. I think we've got time for one more question. I see a hand back there.
This is Uzma from George Mason Law School. I'm wondering about if your projects have taken into account the reasons why there was a difference between the Western and Eastern approaches, if you can call it, like transactional versus the relational. There are not a lot of factors which some of those you have pointed yourself that the host country environment is very different. Maybe it serves their purposes as well, both like their incapacity to have those transparency standards which the Western countries have already, or multinational development banks have. Secondly, it serves their political regimes to overlook a lot of those international standards. So are there like certain differences between these two approaches? You think there would be, are they on a trajectory that at some point of time they would cross or they would meet or converge? Given this Asian or Chinese-led infrastructure financing is very new. Mm-hmm. We can see in some of these AIB and World Bank and ADB joint projects that they are not only adhering to the World Bank or ADB standards on the environment, but also they're going a step further than that. Thank you.
It's a great question. It's a good one for this part to wrap up on. So is there a potential for these paradigms to converge? We know you don't have a crystal ball, but how might that happen? Do you see, I mean, is the AIIB a sort of mechanism that could blend some of this? What do you see happening?
Yeah, I mean, I would say just to the broader question or just comment on that there's other factors involved. I mean, that's what makes studying these projects so difficult. I mean, we tried to address that by trying to go to the same kind of regime, so similar projects, same location, similar sector, similar political regime, and to try and make that comparison a little easier. But you're absolutely right, there's a lot of other factors that could be driving some of these trends. And then in terms of the potential for convergence, I would definitely agree that the AIIB and its specific practices would be the kind of the case in point to look at the kind of convergence of these two paradigms. And it's not, to my knowledge, it's not resolved exactly how some of these practices will include. If it'll be open competition for projects financed by the AIIB, or if there will be kind of a broad standard for open competition within those just for one factor. So I think that it'll be interesting to see those kind of how that institution operates, for sure.
Come and join us real shortly. Thank you all for coming. I hope you found this as interesting as I did. I mean, it's a perspective on the world you don't hear in Washington very much. It's kind of boot-level developments around the world that do have incredible significance, and it's our opportunity to dig even a little bit deeper now, but with two colleagues that have come from very different perspectives, but share the same passion to understand this world. Of course, Brendan Bechtel heads the Bechtel Corporation now, and I'm privileged to say he's also on the board at CSIS. He's really the person that brought the two of us together today, because Brendan also knows the great work that Ray Levitt has been doing out at Stanford. And it was when I first had a chance to show Reconnecting Asia to Brendan, he said, well, do you know about Stanford's center? I said, no, but this is what this is about. This is about creating a network of people that are studying the same issues. And so I want to say thank you to you, Brendan, for bringing us together and for what I hope is the start of a continuing collaboration. I think there's a lot of opportunity that we could do today. What I wanted to do to get everybody comfortable in a setting like this is I usually start with a very general question, and that is really to get people, the audience and the guests or the speakers together intellectually. And so I was very general, which is to ask both of my colleagues if they would reflect on this global build-out of infrastructure. It's remarkable. It's probably one of the most interesting things that's going on in the world right now. Very little of it understood in Washington, and so our opportunity is to try to bring these perspectives, a practitioner's perspective and an academic's perspective, one that's directly engaged, another one that's a little more detached, to explore a couple of big issues today. So Brendan, let me start with you, how you think about this global infrastructure issue.
Sure.
I know you got a couple of slides you're going to share.
Yeah, sure. I'll get you got a preview of some of the slides. I saw people taking pictures, so you'll get a longer chance to with some context, explain those. So first, just a couple of housekeeping things to set the baseline. It's an old habit for me. I'm going to use the word we a lot, and when I say we, I mean Bechtel as a company. I don't mean the United States, but that's the world I spend most of my time in is at our company. So if you hear me use the word we, I'm speaking about Bechtel's perspective. I should also start out by saying that it's my and our perspective. It may not be the same as every other firm in our industries, but I would say that we're a pretty good example, I think, and pretty illustrative example of how other large engineering and construction firms based in the US would think about some of these issues that we're going to talk about. The second is that there are lots of stereotypes in our industry, the engineering and construction industry, about Chinese contractors, and I'm not here to reinforce those today. And in fact, I want to debunk some of those. But I do want to ground us all in the reality of the global competitive landscape, and I'll get to that in a second. I think a big key takeaway I want everyone to be aware of, which we'll get to in the slides in a couple minutes, is that this is a highly volatile industry and a brutally competitive global landscape. And the sources of funding, the type of tenders, the type of competitive environment, you got a flavor for that, I think, this morning. It's also been changing over the years, and this is the reality. And the question that we're particularly focused on as a company is, okay, what do we do about it? What does that mean for us as a company? And I think you can infer from that some potential policy implications. Obviously, there's, from the U.S. foreign policy perspective, there are some questions around what kind of toolkit do you want to have? And I think the examples that we talked about this morning, and my interest in this whole discussion area is really around what can we learn? What can we learn about the way our own country approaches some of these issues and challenges? So, big, broad outline, John, in answer to your question, this is a huge market. So the infrastructure market globally, there are a lot of different statistics. The one I use the most is that it's roughly a $3 trillion a year global market, infrastructure broadly, so the built environment. $3 trillion a year. Most of that is happening in the developing world and driven by some unassailable, unstoppable macro trends such as population growth, a growing middle class, and urbanization. To put that in perspective, the U.S. demand for infrastructure, just to keep up with what we've got, is about $2 trillion over 10 years. So $3 trillion a year for the global market, $2 trillion a year, or $2 trillion every 10 years here in the U.S. So let me come back to, if you guys can pull up the first of my 3 slides. Just a couple of things I want to point out here. So there is the industry journal that covers the engineering construction company is called ENR, Engineering News Record. And every year, based on revenue, they rank firms. They rank domestic firms here in the U.S., they rank firms that are doing work abroad, and they rank firms based on, it's the kind of squiggly spaghetti chart if you go up.
43.
43, perfect. Thank you. So just, again, this is just because, I'm using ourselves as an example here. Long story short, domestic revenue, the first chart you're going to see, it's a ranking of U.S. engineering construction firms by revenue over the last 10 years. And the point that I really want to make here is I really want to make the point that it's all about change over time, and it's an indicator that it's a tough industry, and you can see how volatile it is by the relative change. So while they're pulling it up, and we'll get it up here in just a second, the point of this slide is that our company, Bechtel's, been the #1 top U.S. contractor here in the U.S. for the last 10 years or so. And there are a couple competitors that have come up and down, but just if you think about each contractor has a home domestic market, ours is, as you heard, transactional. It's very competitive, okay? If you go to the next slide is about the international E&C rankings. We'll just give it 1 second to get up here.
Can we get somebody back there that's on top of this?
So I'll just keep going here. Long story short, so these are rankings of contractors by revenue that's generated outside their home country. So you can think about this as sort of an export orientation. These are highly expeditionary companies, and this is the revenue numbers are based on how much revenue they're generating outside their home country. I think a key point here is that we're the only American firm on the list, and you can see that there are a series of I would say, very expeditionary engineering construction companies doing work around the world. Interesting point here. First is that there are 2 Chinese firms that have basically weren't on the list 10 years ago and are on the list today, and there was some discussion about the going out policy, and I think you could probably link those 2 things together. But I think it's interesting. So again, just to ground you, this is revenue that's generated outside of your home country, so this is sort of expeditionary. Now if you go to the next slide, this is my last slide. So this is top global contractors. So this is revenue generated both in your domestic market and abroad. Now this is really indicative, I think, of the competitive landscape and what's happened over the last 10 years or so. A couple of key takeaways. First, you can see that there are more state-owned and more Chinese origin firms, and there are no American firms on this list today. So Chinese firms represent 7 of the top 10 today, and they have the top 5 positions. There was some discussion around the sort of construction industrial complex. I think this is a pretty good visual for that. Bechtel was on the top 10 side of this list for 16 of the last 20 years, and we can't even make the list anymore. Now, part of that, and this is fascinating, look at the change in the scale. Over the last 10 years, not even 10 years, over the last 9 years, the high end of the scale has tripled and the low end of the scale has doubled, which to this discussion around the size of the pie increasing in infrastructure development, I think is a really interesting baseline. So I think one of the questions that's going to be a theme as we go through is it a level playing field for firms from anywhere around the world when competing against, I would say, aggressively supported state-owned enterprises who have maybe a different toolkit than we do. And I don't, that's something that we can discuss. I want to be really clear, this is not whining. This is the competitive reality of our business right now and the landscape in which we're playing. And this is why at some point during this discussion, I'm going to come back and talk about the importance of active commercial diplomacy and a functioning U.S. EXIM. And I'll stop there. I've gone on too long.
Nope, this is a very, very great start. Ray.
So I think Brendan's laid out very nicely the scale of the infrastructure opportunity and just how big a chunk of that China has taken over the last decade. I think when we think about why that's happened and why things are so well aligned in China and perhaps not so well aligned over here with respect to Exim Bank and aggressive promotion through trade consuls and so on of U.S. interest in these projects. China's interest in these projects is not purely economic, as was pretty clear, I think, from the case studies. It's economic, it's strategic, and it's political. So the strategic part of it has been referred to, it's resources, laying claim to all kinds of resources, hard rock minerals, petroleum resources, cell phone spectrum resources, agricultural land resources, all kinds of things that are embedded in the deals for these projects or get put into the negotiation. That Sri Lanka project that Bushra and Mike talked about, part of the deal in the Chinese coming to bail out the failed Whig first part of that project was that they got a whole bunch of land in exchange for the 120 that they used to bail out the previous project. So again, they weren't being philanthropic about it, and nor should they be necessarily. The political part of it, which I think is almost equally important and hasn't been talked about very much, is this huge overcapacity in two dimensions, in the firms, and some of which are state-owned businesses and some of which are private businesses, although the distinction's much less clear, as many of you know, since there are party officials at the top of all of these companies. But there's a huge overcapacity because China had this massive build-out that then slowed down, with high-speed rail, with cities, with all kinds of things, got themselves heavily in debt, got the provinces in debt, bailed out the provinces. The federal government had to bail out the Chinese Exim Bank because these projects were basically not economic. They were strategic and they were political. So in the Chinese context, it's partly political support for these construction companies, which were some of the biggest industrial behemoths in China. And secondly, a very large population of younger males who probably cannot find wives, or almost certainly cannot find Chinese wives because of the disparity in male and female infant births in China. And so you're putting these people to work on overseas projects, making good money and sending it home. You're keeping the companies in business. You're laying claim to geopolitical and strategic resources of all kinds, and you're building up political capital to support all sorts of United Nations activities and other kinds of activities in the process. So again, you can't look at it just as an economic phenomenon. And so, how does a Bechtel or a GE or somebody else compete in that sort of a world where in our country the strategic, political, and economic are almost completely uncoupled?
I grew up in the upper Midwest, and between 1870 and 1920, we had massive infrastructure building that turned out to not be very economically viable. Yep. How much of this build out do you think really will turn into productive investments in a going concern? And how much is just kind of the byproduct of companies knowing how to shake down a government for money?
The U.S. approach to building a lot of our infrastructure, going back to Eisenhower's interstate highway program, was the federal government gave 90% grants for the capital cost and required the local jurisdictions to cover the maintenance. Well, we all know that a politician would much rather cut a ribbon on a new project than patch potholes in an old project. And so systematically, our infrastructure, and again, I mentioned starting with the Interstate Highway Program, the Mass Transit Program, including your terrific metro in Washington, 90% federal money for capital costs, and then supposed to cover the operating costs. And we know that the Bay Area Rapid Transit, Washington Metro, many other metros find it difficult to even cover their routine maintenance from their fare receipts. And you know, subway projects are subsidized all over the world, but not necessarily other kinds of projects in that way. And so our process used to work with a combination of these big federal grant programs for Clean Waters Act, the Mass Transit, the Highway Program. But then there were also all these earmarks of bridges to nowhere, you know, because Senator Stevens is high ranking on committees. You can get a bridge to nowhere in Alaska to an island with a few hundred people that's, you know, people drive trucks over the ice in the winter and don't even need a bridge. And so we had some of that kind of pork barrel political allocation. If you want to look at countries that do a really good job of prioritizing economic infrastructure, Australia is a great example, both at the national level and the 3 eastern states, New South Wales, Victoria, and Queensland, have all done a super job of having nonpartisan committees, almost like we do with the base closure, the BRAC process. Prioritize them, and they have to be voted up or down, no tweaking them. And then it's pretty difficult to push through a pork barrel project that's not on that list. So we've funded a lot of uneconomic projects in this country for a variety of reasons. But a big problem is deferred maintenance. You know, we create a situation where it's better for the local jurisdiction to wait for the bridge in Minneapolis to fall down than to maintain it and then get Uncle Sam to build him a new one, or for the levees around New Orleans to collapse in a flood and then get the Corps of Engineers to come in and upgrade them and rebuild them and so on.
You know, we framed this conference as being kind of a comparison between East and West. But is it really East and West, or is it more kind of a time in the phase of a development of a country? I mean, in a way, America did exactly what the Chinese are doing now 100 years ago. I mean, we were doing all of this stuff. And now we have bureaucracies that make it very hard to get through things. I think what I saw in the chart from your young colleagues, they said that one of the, you know, China comes well integrated. They come joined up. And Brendan, several times you've talked about what are we doing here when we can't even get the Export-Import Bank functioning? I mean, just tell us a little bit more what it's like for you as a businessman that's dealing in the United States that does not have a joined up system.
Yeah, I think so. If I maybe compare and contrast different approaches to government support, I would say, so if you take the example we've been talking about, I guess just a couple things. It's both good and bad to be a state-owned enterprise, right? It's good in that you get lots of government help, and it's bad in that you get lots of government help. And you know, I would say that geopolitical factors might become more of an input to the decision making, whereas you know, I would say that we get to operate free of that influence. You know, putting aside, you know, sanctioned countries, ethical operating environments, FCPA, things like that, which every good company should want to do. So I think that's one element. But the other two key things, as we've talked about, John, are one, I would say, how aggressively a government advocates or engages in commercial diplomacy on behalf of their industries. And I would say, you know, frankly, that trend has been improving here. So I would tell you that our experience with this Department of Commerce over the last year or so has been, I would say, is more in line with what we'd hope and expect in terms of being out and advocating on behalf of American firms trying to do business overseas. And I'd say that's broadly felt, I think, across a wide range of industries and firms. The second thing I talk about is export credit agencies, ECAs, of which US EXIM is one of the primary ones here. So Tuesday, tomorrow, is a big vote. The Senate Banking Committee is going to vote on a slate of candidates to get US EXIM back and open for business. It's an important part of leveling the playing field. So, you know, there are a lot of, I think, potentially well-intended political and intellectual arguments around, you know, reform and why do we need something like a US EXIM. The reality is that right now, today, the US is the only G20 member country that doesn't have a functioning ECA. That's just the reality. So, so that's a
And there was kind of the
competitive
attitude that it distorts markets, therefore we shouldn't do it. But what the hell are you going to do when 19 out of 20 are doing it, and you're the only guy sitting out there that's not?
Yeah. Can I give a little different perspective
Please.
on your question, John? I think the World Bank and the IFC decided some time ago that there's a difference between what's expedient in the short term and what plays out in the long term. And I heard a terrific presentation a number of years ago from Rachel Kite at the World Bank that IFC could show that, and I'm sure most of you know what IFC is, but they tend to issue loans that are junior and longer term than some of the other loans in projects. So they're in there for a long time. That their return on investment is actually higher when they have high social and environmental standards, because then those projects tend to stand up for a long time. They don't blow up because of horrible environmental damage or because of massive social opposition. And so it's actually smart economically to have an appropriate set of environmental and social constraints. Now, where the balance is and how fast and how efficiently you can do those kinds of analyses is obviously a challenge. And I think Mike made the same point, that there's got to be a balance between just funding any project that a government politician thinks is a good project versus this sort of very long, drawn-out review process that could take up to a decade. And so somewhere in between there is something that's sort of long-term economically valuable. But when countries' goals are short-term political and short-term strategic, they're going to compromise the economics. But eventually, it comes home to roost. So the Chinese Exim Bank has had to be bailed out multiple times by the central government. And China's building up a huge debt because of the approach that they're taking. So I think they are learning and they are adapting, as has been pointed out. It's going to be very interesting to see what the Asian Infrastructure Bank is going to adopt for its way to do projects. And our question earlier about convergence, I think we'll begin to see some of that convergence.
So can you just amplify, what are you hearing about the kind of the internal dynamics of the AIIB?
Very little. Maybe someone in the audience knows more about it than I do. I have not been following that closely.
Well, we'll explore that in Q&A. Let me ask, especially you, Brennan, you bid on big, complicated projects all the time. And that starts with the premise that a government has the capacity to manage a complex tender offering. What do you see as you survey your global activity? I mean, are countries capable of undertaking the complex tender offerings? There was once a time when the World Bank really invested in helping countries do that. We've kind of pulled back on that. How do you see this?
Yeah, it's a delicate answer, and the answer is it depends. And I say that only half cheekily. I think so. If you think about a company like us, our constraint is talent. It's the number of world-class teams that we can deploy onto projects. So we have to be selective about where we focus those teams. So definitely, particularly if it's work for or closely associated with the government, the country's track record with respect to running large, fair, complex tenders is a key input to that decision-making process for us. The kinds of things that we evaluate as part of analyzing that would be how many mega projects of this scale and scope and complexity have they delivered before, and how did those tender processes get run? Was it generally viewed as a transparent and fair process by our peers that may have participated if we hadn't participated? There are all kinds of corruption indices that we use to evaluate the risk from a potential FCPA or ethics perspective. I think that the other thing, and actually this is something we've observed with both Chinese lenders, institutions, and contractors, that where they have learned and are improving, but it's something we look for when we're working with governments that maybe don't have experience, is how much outside help and expertise are they getting? So there are a host of infrastructure advisory firms and consultancies and law firms who will advise, who do this kind of work just like we do. It's every day of the week kind of stuff for them. And so, are they getting advice and input on how to approach it, a new challenge or new opportunity? And you know, a common misconception about contractors is that you know, that we want to work for less sophisticated customers.
Yeah,
that's one of the best predictors of projects gone wrong, in my view. We always want to be working for the most successful customers that, like us, do this kind of work, that take these risks, that know how to manage the risks, that want to assign the risks to the party that can best manage them, including managing the risks for which a government is better qualified than Bechtel, for example. So that's how we think about it.
Great.
So, you know, I think we all understand that construction, big infrastructure, capital projects are one of the very big ticket government decision items, like along there with mineral concessions and wireless spectrum concessions and defense contracting. And so they're natural corruption magnets in countries that have weak governance. So what's going to change that? I mean, there was a time not that long ago when companies like Bechtel were under the Foreign Corrupt Practices Act, and countries in never mind China, Germany and France could deduct bribes as a business expense legally. And so that the World Trade Organization, I think, played a major role in leveling the playing field with countries that abide by its standards. China is a member of the WTO. There could be pressure put on it. But the other thing is a lot of Ex-Im banks tend to favor their host country institutions in their lending practices. Mm-hmm. And so it's not only China that does that. And of course, China is the biggest lender through their Ex-Im bank. And so many countries favor their host country contractors, vendors, you know, GE turbines, Bechtel, EPC contracts, and so on. But probably the biggest impact in changing the field and improving the transparency and the openness is expertise in governance, but there's got to be a desire to improve the governance, not just a capacity. And what will change the desire is a rising middle class and somewhat of a free press or access to international press that will embarrass people like president of my country of birth, Jacob Zuma, you know, who may be thrown out of office today, partly because of these kinds of things.
Mm-hmm.
John, can I just arc in with a more specific answer to your question too? So let me give you some examples of world class from a government tendering process expertise perspective. So Ray already mentioned, we really think that the Australian model works really well, and you see a ton of private investment flowing in because of that. We think that the UK is also a pretty good model, and then our favorite of the models right now is Canada. And a specific example of why it works so well is that, and I'll single out Infrastructure Ontario specifically, where on the agency side, so tends to be public-private partnerships. And on the agency side, you have a sort of centralized, experienced mega project delivery professionals who get to work on these large projects over and over and over again. It's a lot like when we work for a large energy company and they have big project teams, similar level of expertise. So that's a specific example where, again, a more sophisticated, experienced team on the government side running these tenders, I think, is really helpful. I think that's...
You earlier, Brennan, you mentioned that you're starting to see the administration push commercial opportunities more, but one of our handicaps has always been we don't advocate if there are two or more companies that are competing, because somehow we think that we're favoring one or the other, so we tend to be passive. Whereas if, you get countries that have state champions, they're out there like crazy competing. I mean, how can we get around this phobia, this bias we have that somehow we can't advocate for America if we've got more than one company that's competing for it?
Yeah, I think it's probably an important core value, certainly to some Americans, is let's not have the government picking winners and losers. So I think you can understand where that value is coming from. At the flip side, when one of the specific tools of trade that we would love to see more of are government-to-government agreements that help facilitate the kind of openness and transparency, rule of law, enforceability of contracts, and a mutual. While it may sound transactional, it helps you get to a more relational-based approach. So that's a specific tool that has worked well in some instances, where I think it would help more. And frankly, it makes it easier and more appropriate for the US government to go in and help make introductions and help facilitate some of that.
Don't have
Okay,
any comment on that.
both of you have mentioned corruption. Obviously, that's always you see it in every article in some form or another. I think it was 40 years ago that we passed the Foreign Corrupt Practices Act. And yet, you're right, up until probably 15 years ago, the French law allowed you to deduct bribes, from your taxes. But that's changed. And the question is, how much of an impediment is FCPA to you, Brendan?
It's not at all. Frankly, that's the very first screen we go through when we look at prospects and where we might be operating in the world. If we aren't confident that we can operate ethically in an environment, we just won't pursue it and we won't go there. Frankly, we're a leading member of the U.S. It's the U.S. International Council of Businesses, which helps promote FCPA type standards and transparency around the world across industries. Increasing transparency, decreasing corruption is a good thing that we feel very passionately about because it encourages fairer, more open competition. And that's really what drives us, is we want to be able to compete fairly and be evaluated on our merits. And by the way, there are situations where even with all that in place, pursuing a specific project might not be the right fit for us as a company. So I think, I would say that FCPA is not limiting, and any good, particularly American company, is going to have that same view. And it's in our best interest as a nation and as a set of companies to be out advocating for that, because it helps level the playing field.
I mean, this kind of corruption is obviously a tax on citizens of countries where it occurs, which enrich the politicians at the expense of the citizens. I think over time the playing field will get level, but we could also be more aggressive in our advocacy in WTO and other international organizations to spread the concept. We were successful in getting most OECD countries to adopt something similar. And I haven't heard U.S. companies complain that this is a barrier. Of course, there are quiet ways of getting around it, hiring consultants, and then the consultants pay the bribes on your behalf and so on. But the most, I think the most sophisticated companies in the U.S., the ones that I know, don't see this as a problem.
Right. I agree with that. Brendan, your charts that you started off with, really very interesting. But it also gets at a curious dynamic. If you go back to 2007, there were very few Chinese companies that had the level of sophistication of a Bechtel. And so they couldn't really compete against you in the premier segment of a market, but you also can't really compete against them in the value segment of a market because they've got lower costs. It's easier for companies to move up that chain than it is for companies to move down. I've seen a lot of American companies that struggle trying to sell in China because they've got a product that they just can't get the price points down to a value segment of the market. But the local competition learns and then they move up. What's been your experience? Is that what's going on here, or is it really state financing?
No, I think, maybe we'll come back and talk about this too, but remember, in all these industries, it's not just state-backed financing that drives the market. There are private sources of capital as well. But on this notion of moving up or down the value chain, first, I don't anymore accept the premise that the Chinese firms or solutions are always cheaper. I think that 10 to 15 years ago, you could have said that, and it would have been a relatively safe statement. I think that the way we think about value and the way that our most successful customers think about value is, instead of thinking about the present day total installed cost of designing and building a project, right? And then you have to operate this project for the next 30 to 50 years. A better way to think about it is a sort of net present value over the whole life cycle of developing, designing, delivering, and operating the asset. And when you do it that way, you get a very different answer. And then that's not even yet taking into account some things that we think are differential about the approach around safety, quality, Capital efficiency is kind of this notion of net present value thinking. The economic, social, and environmental sustainability of the work. There are many of these, particularly public infrastructure projects, where a specific intended outcome of the project is to engage and upskill and employ as many local construction workers as you can. That's a different model. That's a model that plays really well to a company like a Bechtel, who views ourselves as a responsible steward and wants to differentiate ourselves on that. But how do you value all that? How expansive is the calculation of project costs and benefits? So I sort of reject the premise that that a traditionally Eastern solution is always going to be cheaper. In many cases, lower wage rates, that does drive cost, but it's not always the case. And then when you look at some of the externalities that we talked about this morning, I think when you look at it more holistically, you get a different answer.
So one of the things that happened, I mentioned in 2006, 2007, when we did our initial China and Africa study, several of the construction companies we interviewed told us they weren't expecting to make a profit, they were expecting to lose money. So in effect, they were subsidized to get experience and training, and some of them have now become big global competitors. China Road and Bridge is one of them. And they have now built some of the world's biggest bridges, cable-stayed bridges, complex suspension bridges, so they've developed skill over time, but we're, in the early days, certainly subsidized to do that in a number of ways. With low-interest loans, with helping deal with the cost overruns that they encountered and so on. And at this point, some of them clearly are global competitors. I talked to one that was considering bidding on the San Francisco-Oakland Bay Bridge repair, which they were proposing to do for a small fraction of what it ended up costing. They were afraid of U.S. labor law and U.S. environmental law at that time. They didn't know how to deal with those things. But they've certainly been subsidized in their growth and development, and many of them now are world-class competitors. But again, one of the things that I think will move in the direction Brendan was just talking about is the sovereigns and pension funds around the world that I mentioned are sitting on something like $100 trillion of money, are looking to invest in infrastructure. They can't get returns on bonds or other kinds of traditional assets that pensions invest in. The only way they can get their 8% or something like that is to invest in riskier kinds of assets like infrastructure. And so we're seeing more and more interest by pensions and sovereigns in coming into infrastructure. And when they do it, it's on a public-private partnership, 25, 30, 50-year concession, which then brings the life cycle cost into the equation rather than the first capital cost. So I think those two trends will help deal with this issue of this sort of you can't go down, you can only go up, because again, I think as Brendan said, on a life cycle basis, many of our companies will be competitive.
Well, and those funds are going to insist on a degree of transparency that will, I think, change the market. I mean, because they can't.
Those lenders require competition. They require transparency. They have strong principles about kickbacks and bribes and so on. And so that will also help. So the fact that they become big lenders on these projects, I think, will help in many ways to rationalize the projects that get built and to make the ones that get built more sustainable.
I was just going to say, John, I think that's why I, pun intended, connected with the Reconnecting Asia project so quickly, is because I think anything that promotes transparency around the way project decisions get made and what the actual outcomes are in terms of the costs and intended benefits of those projects helps promote that fair and open competition. So I think that's good. Actually, I'll hold off on my other comment till later.
Okay. Again, let me use that as a pitch. We would like your help in making Reconnecting Asia a better site. So give us information that you think is relevant, helps us improve this trend, because obviously it's good for everybody in the world if we've got good, quality, transparent infrastructure development. Okay, let me open up for questions here. We'll start right over here. He's a very energetic, young, his arm went right up. Right in the first row. There we go. Please identify yourself.
Sure.
And no lectures, just questions.
You got it. Jonathan Ward, I'm a China-India Relations Specialist, Atlas Organization, and University of Oxford. So as a China-India person, I want to focus specifically on the Indian Ocean region. My question is this: when you have Chinese firms essentially going out to serve the Chinese strategic interest, which I think we can largely agree that they're doing. And when there arrives a sort of clear and present US strategic interest in balancing that in the region, what do you think is going to be the role of US firms and also allied firms, let's say Japan, or even friendly firms like Indian firms, in preventing, let's say, a region that's over-indebted to China, or where infrastructure projects like Hambantota come online with 99-year leases that serve Chinese interests?
Can't wait to hear Ray's answer on this one.
Well, I was going to let you go first. Yeah, I'm going to spare you on this one, Brett, because it's not your line of work, but it is government and policy. So go, please, Ray.
Many of these are ports, and 90% of the world's trade right now goes through the Straits of Malacca between Singapore and Malaysia. And historically, that area's had problems with pirates and all kinds of things, but it's also an area where China is asserting its diplomatic muscle in the South China Sea. And so this is all, again, part of a grand strategy. It was notable on one of the slides that John showed earlier that there was almost no investment by China and India, but there was investment in Bangladesh, Pakistan, and other countries in that region. And so it's going to be interesting to see whether the US tries to buffer some of India's port activity in that area to create some alternatives. Other than that, I'm not sure if I have any other thoughts.
I'm supposed to moderate, but I'm going to break the rules here and interject my own thought, if I may. This is a debate that's now just unfolding in Washington. Speaking about the policy world, the world that I live in, it's shifted over the last 2 years, and there's now very much, I think, the consensus view that China is weaponizing its private sector for state purposes. Now, that's not a settled debate, and I actually think our biases are ahead of our knowledge. So I think the real question for all of us is to do objective analysis over the next 2 years to say, is that true? Because I think that there's a lot of change in what Chinese companies are doing that we have a 5-year-old image of what they're doing. I mean, I was on a flight into southern Iraq, and there was a Chinese labor was being changed out from some project. They had cooks, they had stewards, they had Tutsis, the whole thing. I mean, the whole package was on this flight. But that's changing, because they now realize that alienates people. So I think we need to be careful as we're hardening our attitude in Washington about Chinese economic activity for state purposes, that we are really grounded on the facts. And I think that would be a challenge for everybody going forward. Okay, yeah, this gentleman right here.
Thanks very much. Peter Raymond with PricewaterhouseCoopers. I'd like to go back to the global competition question. And technology is disrupting so many industries today, and we see it in the engineering and construction industry as well. How do you place Chinese construction companies in the technology race? And is the increased competition driving more innovation from the US and Western firms or not?
It's a very insightful question. So the answer is yes. So you can't help but be in our shoes, look at that last graph I showed you, and wake up motivated every day to get better. And to come back to this thread that John asked about moving up or down the value chain, we're approaching this moment in time with the mindset of how do we learn from this and how do we get better. So as a company, for example, so some of you may have noticed our industry, the construction industry, made the cover of The Economist magazine in August, which terrified me, talking about the fact that the construction industry had the worst productivity improvement of any industry in the world over the last decade, which confirmed and built off of a study that McKinsey put out June of 2016 or 15 called The Construction Industry Imperative, that talked about manufacturing has doubled its productivity over the last decade while construction has declined. And so this is, when I talk with our people or others, I sort of say this is that curve, it haunts me at night. And so the question is, what are we going to do about it? So in our view, technology is going to play a really important role. So what we want to do is figure out how have Chinese firms achieved industry-leading productivity. It gets interesting when you start thinking about how you balance that with the quality, safety, environmental stewardship obligations we feel, but it's pushing us to think more creatively about, okay, the way, as an industry in general, our industry has done things pretty much the same way for a pretty long time. And then that's not even taking into fact that you've got substitute threats coming from different places, whether it's new technologies totally rewriting the way that projects get delivered. So the answer is yes, that's a core question. So as a company, we've set a 5-year goal that we're going to improve our cost of delivery, so the total cost of delivering projects by 20% over the next 5 years, and improve our schedule performance by 30%. Okay, now we set that goal without knowing how exactly we would do it, but we needed to plant a flag publicly and say, we're gonna go do this and we're gonna work really hard to figure it out. We're about halfway there. Now we're coming up on some big decisions where we'll actually be bidding projects and making firm commitments based on things that we've proven in theory. So this is not without risk, but that's the standard we have to hold ourselves to. So I do think it's possible for us to work our way, I would say, up the value chain, not down, because it's actually allowing projects for some of our customers to become economic that otherwise wouldn't be. But I welcome that competitive pressure. It makes us better.
Can I comment on this one?
Yes,
John?
please. Yep. No,
Keep in mind that China has a surplus of labor, and Brendan was saying earlier, he's constrained by the number of people he can put on projects. So the US and really the whole world is on the cusp of radical technology change in construction. People that don't work at desks could never use desktop computers. But what's happened now is you have smart mobile devices where the smartphone in your pocket has as much power as an old IBM 360. And you have broadband everywhere. With cellular networks, you don't even need Wi-Fi anymore. And all of a sudden, the industry is just transforming itself. And there are venture capital firms springing up left, right, and center. I work part-time with one of them that are seeing a huge opportunity to automate many processes that have traditionally been paper-based, inefficient, and flawed. And so I think the US will probably adopt those faster, although who knows? I know Bechtel's using drones on some of their projects. They're adopting all sorts of wireless, cell phone-based applications for things like payroll and other kinds of things. So I think we have a very big incentive to raise our labor efficiency. But as Brendan said, there are other parts of this equation, which is the extent to which we enforce safety practices, the extent to which we deal with environmental sustainability and so on, that are part of the reason the industry's been held back. But part of it is our reliance on the same approach that you can see in the British Museum of drawings on papyrus of old Egyptian temples until 5 years ago, literally, when we started using digital building models and this kind of technology.
Right down here in the front row, the second row, I should say.
Hello, PK Semler from Capital Intelligence Greater Central Asia. This conference could not have better timing. The President Trump is about to make a speech naming China as a strategic competitor. My question is for Mr. Bechtel. You're considered the gold standard. Everybody wants to do business with you outside the United States. Bechtel, from Schultz, Weinberger, your legacy, everybody wants to do business. My question is, how can an American company compete with the Chinese? We're seeing Chinese eat our lunch in Athens, the Port of Paris, Djibouti. They're even trying to take over the Port of Bizerte. And these are great infrastructure contracts, which you're the best qualified to do. How will you see Bechtel taking back the leadership and getting back on the global top 10? Thank you, sir.
Wow, that's a very difficult question. It's one that we're wrestling with. It's I would tell you as a recovering Stanford MBA, one of the things that you're taught when you think about strategy and competitive forces is that competing head-to-head usually can end up being a race to the bottom. And so if you're being thoughtful about it, you might want to think about being different. And I think that some of the differences that we talked about this morning can give you a preview of how we think about that. So I would tell you I can't answer what other American firms or Chinese firms are focused on, but at Bechtel, we're really focused on this integrated approach to engineering, procurement, and construction. We're particularly focused on creating sort of maximum net present value over the life cycle of a project. doing that in a way that's consistent with our company's values around the environment, around safety, around quality, around community engagement. And not every project is going to be the right fit for us. So, and as we saw, the size of the competitive pie is increasing. And so there's lots of opportunity to compete, and it's still a big market. So I would tell you that there are situations where we compete head-to-head with Chinese firms. Sometimes we win, sometimes we lose. That's usually going to be driven by what the end customer wants in their value proposition. And then it's also worth pointing out that we work with Chinese firms either as partners, joint venture partners, or subcontractors, as well as use a Chinese supply chain, as every company in our industry would on a selective basis. So to me, it's not an either or. It's, as I think the charts I put up and some of the project finance charts that were up earlier, we've got to figure out a way to do this together. Because frankly, when you look at the demand for infrastructure around the world, it's something that we've got to figure out how to work together.
This lady right here, I'm going to get you next.
Hi everyone, my name is Yating Li from Duke University. I'm going to put Duke University aside and just ask this question as a Chinese. I think I'm wondering what are the existing multilateral framework that's going to help China improve its environment and social standards. I'm asking this because there are several things I don't understand right now about US policy. We see US exceed Paris Agreement. We see US drop the TPP. We see US very recently blocked the WTO progress. Under this kind of international framework, it's very hard for me to see how Western donors, especially the US, is going to force China in the international multilateral framework to improve their standards. Thank you.
Okay, thank you. Ray, I'm going to let you get this one.
I think the pressure in China will come from inside China for companies to take better care of the air, the water, the land, and we're seeing a lot of this already, and I think President Xi is very responsive to this. And so the air quality problems in cities like Beijing and Shanghai are legend. The environmental damage that's been done by previous smelting and steel making and paper making and other industries has polluted waterways. China is short of water, like many places in the world, will be increasingly short of surface potable water in the future. So I think the pressure from China will be internal. For international projects, again, we count on a rising middle class in countries like Africa and Southeast Asia and some of the other places where we're seeing on this One Belt, One Road map to require that these projects that do environmental damage don't get built, and politicians will be held accountable for it.
And let me just say, on your criticism of the United States not following through on environmental issues, things like that's a product of a deteriorating politics here, where two parties are fighting, but they're fighting with nostalgic images of looking backwards. They're not looking forward. And that's a battle that's unfolding now. I think you're going to see over the next 2 years a much richer and more substantive debate. Our politics is causing us to look pretty confused right now, but I think you're going to see a change coming. Okay, I've got time for probably one question left. Ma'am, right to you in your back. Well, actually, forgive me. Let me ask this lady here. She's been asked. Her hand's been up at every opportunity, and you did have a question before. So ma'am, you go right ahead. But just a question.
Wonderful. Thank you. We are talking about this is global issues, but somehow it's really related to all our contractors, and the major contractor is also probably really based on America, basically. My question also related to last session is, we all talk about corruption, and somehow in the United States, company may say corruption is originally from overseas. But the problem is in America, you are talking about drain the swamp. In China, you are talking about anti-corruption. In other countries, or general public, maybe they would say, don't let the people in the advanced country to judge the need or the power of the poor countries. So I just wonder if you can really, based on accountability, verify the real accomplishment and improve the well-being of the poor country or the global population. And second is for
Okay,
working.
that's one question enough. Thank you.
I mean,
Because I'm
related.
running out of time. Thank you. Ray, do you want to take the lead on that, or Brenda, do you want to?
I'm happy to answer it. Yeah. So I think, I think that as I think Ray and John talked about before, any industry where there's a lot of interaction with governments, be they local, state, federal, or international, they are high risk from a corruption perspective. Any time that there are contracts between a company that's meant to deliver intended project benefits to the people of a place for a specified set of costs, I think that also injects additional expectations and accountabilities. I'm not in a position to comment on, I think you raised some points that are raised often. All I can speak to is the way that Bechtel thinks about these responsibilities, and we approach it with the mindset of, I'm the 5th generation chairman and CEO of our company. We'll be 120 years old next year, and we think about building our company and our reputation for the next 5 generations. So we're never going to go take a risk around reputation or corrupt practices. We just won't even go near it. So, and I would say that my experience is that most other U.S. firms operating at scale in a global context would say exactly the same thing. And I know that there are lots of firms from other parts of the world, including the developing world, that feel exactly the same way. But I can't speak for the whole industry across the world. So that would be my...
So, we had a case study of Sri Lanka where the previous president was thrown out over allegations of corruption. South Africa, President Zuma is likely to get thrown out, or if not now, then soon, over allegations of corruption that are fairly well substantiated. So I think, again, that the free press, and it's pretty hard to suppress a free press anywhere in the world with internet access and people using tools that are encrypted and avoid being censored even in countries that want to censor them. The pressure will grow to get rid of government corruption because it's stealing from the people of the country. And as the other thing about environmental relating to the previous question, as countries mature and they grow economically, the trade-off between economic growth and environmental preservation tends to shift towards environmental preservation very steadily. And it's happening in China right now.
Okay, one last, and then I will wrap it up. Yes, sir. Take you, and then you get the benediction.
Leo Zucker, Centennial Group. I'd like to go back to Mr. Bechtel's point about how the U.S. government won't choose favorites between two companies that are competing for an international tender. Could you briefly describe some international best practices that the U.S. could put in place, say, that have been used in other liberal market economies in order to pick a favorite in these sorts of competitions while not running the risk of having any semblance of political interference on our end?
Yeah, it's a great question, and I do think this is a specific governance question and a fairness question that, as, for example, the Department of Commerce and State Department look to ramp up their advocacy on behalf of U.S. firms, I think we need to be really thoughtful, and that needs to be an open public debate that everyone's a part of. Again, transparency will make all that better. So the specific example, I'll reuse it, is Infrastructure Ontario and the Canadian model, where they have part of what makes this fairer and part of what prevents picking winners and losers is when you have well-known, consistently applied frameworks for self-selecting into these tenders and well-publicized criteria for how the decisions are going to get made. And all of this is a matter of public record. So there are monitors that there are groups whose job it is to go in and look and make sure that the government's doing what they said they were doing and that contractors are doing what's considered fair and ethical. So I would highlight, and then within that, you need to drive the private sector to want to be interested and to want to play by these rules of the game. And so in the Ontario example, it's a mix of both how the project financing works as well. But I would say that, so I would say I'd come back to Canada, the UK, and Australia, I think have really good frameworks around this. And it's a leading indicator of that would be that they invite and welcome international firms to compete for domestic tenders, right? So clearly they're not picking winners and losers. They're just evaluating they're evaluating bidders based on their merits, and there's a protest process if you feel like it's been unfairly awarded to somebody else, or if there's a procurement irregularity. I think those are three best practices, and I would say the U.S. is behind that, and we'll see next year when we're told that the agenda might switch to infrastructure and how we think about that here in the U.S. But we'll see.
I think an example of a country that clearly picks winners and losers is France, but it's often partly because some of the businesses that they're favoring are state-owned businesses, or the state has a substantial ownership in those businesses. Think of Alstom, think of other companies in France.
But I think that one of the things I've heard from both of you today is that there's an enormous opportunity for improving transparency around the world because there's so much private capital to be mobilized to build infrastructure. Yes. Usually corruption comes from when governments set the ground rules that try to favor people. And moving towards the enormous capacity to invest through private resources in public-private, that can be a key that would be helpful for everybody. It would save thousands and millions of Chinese that are going to pay a price for building infrastructure that is not economically viable. So it's a moral imperative for us to sell this to everybody. Colleagues, this has been fascinating. I hope you felt it was worth your time. Please thank both Ray and Brendan with your applause. Thank you. Thank you, John. Very nice.